Akshay, over to you first.
Yeah. So the first pick is Muthoot Finance. Currently, it trades at 1476. Technically, it's in a very strong uptrend since the last 3 4 months. And as I see right now, it's been confined in a range. 1440 is the lower end of the range, and 1500 is the upper end of the band. Since the last few trading sessions, stock is preparing for a strong launch on the upside. A breakout above 1500 would target around 1540 to 1560. I'm preempting this breakout, which will be seen very soon. So buy Muthoot Finance. Current rate is 1476. Your target area will be 1540 to 1560. Your stop loss should be at 1425. Second trade is in the banking space, State Bank of India. As I mentioned a few minutes back, it's already a breakout story, and the momentum is regaining in this bank. The PSU story is still on, and I believe State Bank is the best pick out of the PSU space, as I understand by going by the chart readings. 675 to 690 is the target area you look forward to. Your support base is 635, so your stop losses are below the support, and you target 675 to 690 very soon.
Okay, absolutely. Now, Mayuresh, your turn.
Okay.
Absolutely correct. So I think as I spoke about all the macros and the infra and the capex related themes, along with what can come in terms of budgetary allocations, I will continue with our call, which is a structural call on Welspun Enterprises. Company is poised both in terms of roads and waste and water treatment. Waste and water treatment is 64% of their top line, and the rest is a combination of roads within which the EPC part for both waste and waterways and the EPC of HAP, which is again a high IRR business, should contribute meaningfully well. They are monetizing some part of the road portfolio, so 1,700 odd crores, which they have invested as equity. They are expecting proceeds of almost 2,400, 2,500 crores to probably come through. The second element in terms of the allocations towards urban infra, and specifically in terms of Nal Ke Jal schemes of 60,000 odd crores, rural infrastructure as well. I think a lot more budgetary allocations are expected to happen in a very meaningful fashion, and a lot more orders expected to come through in the next few quarters as this gains speed and momentum. And therefore, from a balance sheet construct perspective, with very marginal debt onto their books, expectations of margins were in the first half around 19 odd percent, expecting around 17-18% margins with a company called Michigan Engineers, which they've taken over, which is an expert in tunneling. A lot more work expected there as well, as far as metros and other ancillary work is concerned, and a 9,000 crore order book with more orders expected their way. I think all check boxes are probably getting ticked for Welspun Enterprises. So you should definitely have this stock on your radar. And it's not too expensive compared to its own standard averages and compared to the group that it is trading at. So that is one stock that I keep in mind. The other one is on pullbacks. So if JK Cement pulls back 4 or 5%, I think that will be a good entry point for medium to long-term investors. Obviously, cement as a sector the expectations are pretty high, but I think the expectations should probably get delivered by most cement companies. The capacities that they have got, specifically grey and white at 20.7 and 2.2 respectively, there is an increase in capacity which is expected of 1.5 as we speak. That should get commissioned anytime, and a 2 MTPA capacity expected in some timelines in the next 2 or 3 quarters. That will clearly aid volumes going forward. Margins have been extremely good. The reported EBITDA per ton has improved quite significantly. Pet coke prices have seen an increase but are expected to remain extremely stable. With diesel prices the way they are and expectations of these crude prices expected to stay in a range, these costs will come down, which means EBITDA per ton as utilization levels improve, which is at 75%, as it inches toward that 80% mark, will create an operating leverage onto the balance sheet. Not too much heading onto this books. And we really like clean balance sheet at this juncture. With rate cuts, the capacity to take some additional incremental debt for growth perspectives obviously augurs well for all these stories going forward as well. So JK Cement on pullbacks and Welspun Enterprises is something that we continue to like and participate in.
Okay. A very warm good afternoon to you, Mayuresh. We were just waiting for you, Tanya and I. Bikaji Foods has hit a record high, and this is also the time for lunch.
Yeah, and you're
Akshay, why
going to
don't
enjoy
you
bhujia, I know, with your
दो
meal.
चार
I
10
know
मिनट
that.
में बाजार बंद हो जाना. Yeah.
But Shel sir, I'm having the revdi that you've
Mayuresh,
given me. So
first, अरे बड़ी मेहरबानी आपकी, आपने याद रखा. Okay. Okay, Mayuresh, first to you, some words of sympathy for bears in this day and age. I really wonder why people go short, but they do. And it's visible on the screen. They are getting killed by every passing second. So, a word of sympathy for them. And then Tanya and I have been waiting for you. Bikaji Foods.
नहीं ये बाजार शॉर्ट ही नहीं कर सकते शेल सर आप यानी ये बाजार में शॉर्ट के तो सबसे बड़ी गलती है सो आई थिंक द बिगेस्ट मिस्टेक दैट यू आर गोइंग टू डू इज शॉर्टिंग द मार्केट सो obviously I think we are in good territory, we are in fine fettle, and therefore the momentum remains on our side, and this momentum might very well continue as we head into Jan as well because of both what is expected out of the budget and the pre-election rally, plus very less alternatives for FIs and the kind of DI money that is pouring in. So I think कोई structural downside लग नहीं रही है for the market. So I think all the best to the bears, as I would say. The element on Bikaji Foods, again, I think two things happening for packaged food companies. One, obviously, is the expectations of volume growth. And where Bikaji is positioned, ethnic snacks is almost 68%, packaged sweets is 18%. So that's a large part of the portfolio, around 85%. Western snacks around 6, 7, 8%, and papads make around 6%. Margins have been exceedingly good in the previous quarter, around 14%. And with expectations of input costs, both flour and edible oil prices expected to head lower, the expectation is that margin expansion along with volume growth, the volume growth both because of demand amplifying in the next few quarters and expectations in terms of capacity increases to meet demand by organized players like Bikaji Foods. I think that is clearly going to aid operating leverage onto the balance sheet and create huge implications as far as the return ratios are concerned. Again, the stock really in this financial year where all stocks have probably moved in the broader markets 2 times, 3 times, has just delivered returns of around 40-45%. So that there is good runaway growth with a lot of tailwinds that should favor Bikaji Foods shares.
If you like the video, do like, comment, share and subscribe.